Stephen, good to have you back on the program. So how ugly is this whole European saga going to end?
You know, I got to agree with Chairman Bernanke that a lot of the pressures that we're seeing in the U.S. Equity markets and the economy can be attributed to Europe. So this is the eurozone was a poorly conceived and even more poorly executed project. It was unclear to me, and I think a lot of informed people, how it could work, and it's not working. So I think really the question is, are European policymakers going to make the very difficult decisions to either save the eurozone or to find some alternative to the eurozone? But what they're looking at right now is certainly not going to. The status quo is not going to persist.
Okay, so you don't feel a little bit more confident after you heard from Angela Merkel saying that she's basically, and Germany is going to do everything they can to hold up the eurozone, provide support?
I believe that is their intention. And what we've seen in Europe is that they lack infrastructure, they lack these formal institutions for the euro. They never thought something like this would happen, and to the extent that they didn't provision for it. So it's kind of coming down to, you know, German sentiment. I think it's going to be a tough battle politically. In the euro currency zone, you either need to get something similar to a United States of Europe that has a central treasury, you know, a central bank, and that has, you know, the ability to have a fiscal authority, or you do something else. So even if they do go that route, I mean, you're talking years and a lot of treaties, referenda. So I think it's a political problem that has economic consequences, and a political solution is not around the corner. So it kind of falls on Germany's shoulders.
Yeah, and reverberations around the world as well. So is this the Lehman's events for this year? How badly is this going to end for global markets?
I like how you phrase that, for this year. I'm not convinced it's going to be a Lehman event. I think we're getting close to a Bear Stearns event, perhaps. You know, something that we saw in the spring of 2008, where there's more of an orderly or orderly-like unwind of what we're seeing in Greece and perhaps, you know, Spain to a lesser degree or less immediate degree. But you're seeing a freezing up, a seizing up of liquidity and credit markets in Europe, not dissimilar to what we saw around Bear. I'm not convinced it's going to be a Lehman event just yet, because Lehman had a startling element of surprise. Nobody thought that it could happen, and I think that a lot of people were flat-footed as to how interconnected Lehman Brothers was. What we see in Europe is it's pretty well known what exposure is of what financial institutions to Greece specifically, so it's not going to be as surprising as Lehman turned out to be.
Okay, gotcha. So then what about this news flow? And there were rumors that BNP itself, one of the largest banks in Europe, couldn't get access to dollar funds at the credit windows. I mean, to me and to a lot of people in the market, that sounded like 2008 and credit crunch all over again.
It does, and like I said, it may not be a Lehman event, but it certainly is getting close to a Bear Stearns event at that time. So I think you're seeing the European Central Bank perhaps not being as aggressive as it could be. They're going to need to open up liquidity funds. So, you know, from my perspective, you know, the TARP and the TALF and the other policies that, you know, then Secretary Paulson put into effect appear to be the right answers, and you got to give credit to Secretary Geithner for not getting rid of them. So it's what we're calling le TARP. You know, you're going to need to see a European counterpart of the recapitalization of European banks on the event that these credit market seizures persist, or that a credit event occurs. So I think it might be more palatable to German and French voters to bail out French and German banks than to bail out, you know, Greece and their profligate ways. So that might be a better political sell as well.
All right, I like how you Frenchify that. Stephen, one more question for you. You know, we've been hearing from J.P. Morgan Stanley, who are warning of a tough trading quarter ahead, and a lot of people are doubting whether or not we're going to see gains at the end of this year. What's your view on equity markets right now? Are we going to see benchmarks higher at the close of December?
Yeah, you know, our numbers have been pretty consistent all year long. We're looking at, if you look at equities in the U.S., I mean, it's not an unreasonable forecast to have equities end the year positive. You were talking about the United States being the cleanest dirty shirt in the closet. You know, the U.S. is down, but it's held up pretty well relative. You know, Germany's down basically 30%, as is France. So in equity space, the U.S. has still held up really well. We're where we were in the spring. So in this risk-off, risk-on, risk-off, risk-on environment, you know, if there is some reasonably not bad news out of Europe and, you know, some okay economic data in the United States, it's not a stretch to think that the United States could end up in the green for 2011 on the equity front.